Yeah, some of the deals that we've done recently and some intel on some of the players in the space. PureGym, which is a group out of the UK, entered the US with 3 prototype clubs down in the DC market. Their original plan was to do area development agreements. Then they got their hands on the Blink assets that were sold out of bankruptcy, that were owned by the Equinox-related holdco. And then what was interesting is that Leonard Green, which is the owner of PureGym, ended up buying Crunch. And because of that, PureGym was basically prohibited from doing franchising in the US market in order to not have one private equity firm with 2 competing franchise disclosure documents in the same market. So we sold a couple of clubs to PureGym, which are independent operators. We're going to talk about this theme today of a lot of independent operators that own clubs for 20 to 35 years since we've been doing this are looking for exits, and there are 3 clear strategic buyers out there right now with capital. One is PureGym, the other are area developers under the Crunch flag, and Planet Fitness area developers. So those are the 3 groups that are contractually obligated to go into a city and compete with an independent operator. And what we're trying to do, Brian and I, are trying to be the conduit to get those independent operators to transact and convert to the other brand instead of trying to compete and maybe have an over-clubbed city, and then the profitability of that city kind of shrinks because of the number of clubs. I've always said that irrational development is the biggest issue in our industry, and I think that's the biggest risk for most of the investors that are here.